What's up, guys? 7 Star Mike here, and today I want to go over something very important. If you want to be a flow trader, there are things you need to know about the flow. What are the basics? What's good? What's bad? What do we follow? What do we not follow? So today we are going to go over the flow basics. First things first, what is flow? This is what comes across the black box scanner throughout the day. It is real time as the trades come in. If the algo criteria is met, it'll be picked up and it'll come across our scanner. This will just filter in throughout the day, and sometimes it comes in very quick, sometimes it's a little bit slower. What flow actually is other traders placing trades. So here we have Tiva, 1/15/2021 expiration, $5 strike on puts. The spot was 787 at the time. Someone bought 198 contracts at 89 cents, which was on the ask, and it was a sweep that cost them $17,600. As this trade came in, it met the criteria for the algo and it came across the screen. The very next trade that met the algo's criteria was Twitter, 42.50 strike for calls. The spot was 42.86, so it was just barely in the money. Someone brought 250 contracts at 152, and that was above the ask. That was a sweep. It cost them $38,000 to open that trade. So this is real-time flow. It just comes filtering in throughout the day, and it's telling us a bunch of things about what other traders are doing. That's what the flow is. It's trades that other traders are making, and if it meets the algo's criteria, it just comes in throughout the day. This is what we're watching. Now, the majority of the flow that we see is going to be what that screen showed, is mixed flow. There's going to be calls, there's going to be puts, there's going to be various expirations, there's going to be various strike prices, there's going to be ask, there's going to be above ask, there's going to be bids, there's going to be below bids, there's going to be sweeps, there's going to be blocks. It's completely mixed. So up on the screen here, I've got XOM, and let's say you had this on your radar and you wanted to trade XOM for the day. You start seeing flow come in, and this again would be real time. You start seeing one trader put some money into XOM, another trader comes in, trades XOM, another trader comes in and trades XOM. So you're watching the flow come in as it does so real time. Here, we've got calls and puts, blocks and sweeps, and there's nothing consistent about what we're seeing. So if you're trying to trade this ticker off of the flow, there's nothing that we would be able to trade. The strikes and expirations, they're all over the place. There's calls, there's puts. It's just a mixed bag of trades. So that doesn't mean you can't trade XOM on this particular day, but if you want to be a flow trader, the flow does not tell us anything about what trade we would want to take. So when you see flow on a ticker that doesn't tell a story, move on. This particular flow tells us nothing about what the big money thinks of this ticker. So you can make a trade off of this, but not off of the flow, because the flow is just mixed. It just doesn't tell us any kind of a story. ETFs, you'll see a lot of flow on ETFs. We don't really trade the ETFs off of the flow, and there's a few reasons for that. So with this right here, there's some puts coming in for $254,000. More puts, same strike, same expiration, $254,000. More puts, same strike, same expiration, $304,000. So you can start seeing people are putting some money into this one. Over here, that combined is about $813,000 on puts. $813,000 is probably a lot of money for us. For someone trading the SPY, it's probably not. So sometimes this isn't necessarily predicting a downturn on the SPY. This could be someone that's just hedging their position. So all of this combined, if we look down here, this flow represents 3750 contracts of SPY open. They're all above the ask and their sweeps in yellow, but 3750 contracts represents 375,000 shares, right? The SPY traded 82 million that day. So while $813,000 above the ask yellow sweeps, it might look nice at first glance, but it's insignificant to what the SPY normally trades. So there's so much flow coming in on the ETFs throughout the day that it's insignificant compared to what we're looking at. ETFs can be hedges. These contracts can also be small numbers relative to how much the underlying trades. These numbers on another ticker might be significant, but on an ETF, the flow just doesn't give us any indication of what someone might be thinking about the SPY direction. So you're going to see a lot of ETF flow, but it's not something we trade off of. Bearish calls. There is such a thing as calls being bearish. And for the most part, calls are bullish, except for one condition. If you're buying a call, that should be bullish because you want the price of the underlying to increase. But would you sell that call if you thought the price was going to continue to climb? If we look here, BB means below the bid. So below the bid means someone is closing or writing the position. If you're closing or writing the position, that means you don't think the price is going to continue to go higher. So if you're in a call and the price is going to go higher, you wouldn't sell it. You wouldn't close that position. If you think ABBV on this particular day was going to go higher, you wouldn't write that position. Because when you're writing the contracts, you want the person that's buying them to lose money. So you think if you're writing calls, the price is going to drop. So even though you start seeing same ticker calls coming in back to back to back, these are calls that are being traded below the bid. Below the bid means they're either closed positions or it's someone writing the position. So what we're looking at here is this is a bearish situation. You wouldn't close a call position if you thought the price was still going to climb. You wouldn't write a call position if you think the price is going to go up. So when you see a bunch of calls, it doesn't mean jump into that trade because there's a lot of action going on. If these are being traded on the bid or below the bid, and it's not 100% of the time, but 99% of the time, this is showing us that someone either sold this position, they're writing the contracts, closing what they already have. Both of those are a bearish situation. So if you see a bunch of calls come in and you follow this and you buy some calls, you're actually going against the trader who's closing or writing this position. So there are such things as bearish calls. Some sites don't give you that information. Black Box Stocks does. We want you to have the full picture of what's going on. At the same time, we have bullish puts. Same thing. These are puts, but they're being traded below the bid for the same reason. If you're closing a put position, it must mean you think the underlying, in this case, this example shows Tesla. If you're in puts and you're closing them, you must think the price is going to start increasing. So even though they're puts coming across your screen, if they're coming in on the bid and below the bid, that is someone closing their position or writing their position. And depending on the color of the flow, we can help determine that. But someone closing or writing a put position means they think the price is going to increase. So same thing, these are puts, but it's a bullish flow pattern that we see here. So if you think the price is going to continue to go down and you're in a put position, you wouldn't close that position out. So if you see a bunch of puts like this come in for Tesla, don't jump in necessarily and buy puts because these are being traded below the bid. That is someone closing out their position. So that is a bullish scenario, even though they're puts coming across the scanner. Massive flow is one of the things we want to look for as a flow trader. This is BHC. If you look, 653, 656, 755. Up here we have 804, 856, 925, 1058. Throughout the day, and by the way, I'm on West Coast, so 653 is my time. That's actually 953 on the East Coast. Throughout the day, this flow just keeps coming in all day long. People are getting into this position. The first hit on the strike was 9:53 in the morning. The last trade was 1:58 if we're going by East Coast time. So throughout the day, buyers were just stepping in and pounding this one all day long. On this day, there were other strikes and expirations that were being purchased also. But when you see flow like this, it's just constantly coming in throughout the day. That's something we want to take a look at. Someone's excited about the movements that they expect for this one, and that's something we might want to follow as well. When it's just getting pounded all day long, someone clearly wants to build a position there. Pristine flow is what we will trade 100% of the time. This is target. On this particular day, we had 719 strike, or sorry, 719 expiration, $90 strike. These are all calls. They're ask and above ask trades, and with a few exceptions of blocks, they're mostly sweeps. This is one of the things we want to look for. Same strike, same expiration. They're all 719, they're all $90 strikes. Same strike, same expiration, just pounded. The buying was relentless on this. One of the other things we want to note, look at the contract price. It starts here at 96 cents. It goes to 98 cents. It goes to $1.10, 11, 13, 16, $1.17. So even though the price is going up on these contracts, someone is still stepping in to buy more of them. We want to see the price keep increasing, and we want to see the buyers continue to step in and buy them. This is flow that we're most likely going to follow. It's pretty much when it comes across the screen like this, we're going to jump into it. You can pull up a chart, you can take a look at what's going on. But someone, or in this case, most likely multiple people, want this particular flow. Because they're sweeps and because they're ask and above ask, they want the flow now. So what this is showing is a conviction that this strike and this expiration and this price still going up, but buyers still stepping in to buy, that's showing conviction for something that's going on at this time frame for this dollar amount. There's something going on where someone thinks the $90 strike price is going to be important by this time frame. So this is pristine flow. It's the same strike, same expiration. The contract prices are moving up. They're sweeps, they're ask and above ask. That's what we're looking for as flow traders. That is pristine flow. That's the flow we want to follow. When we see it come in across the screen like that, we're going to follow it pretty much all the time. That's the flow we want to follow if you want to be a flow trader. Sometimes in the room you hear us talk about sneaky whites, and sneaky whites refers to the flow that's all white. So the colors of the flow have significance. When it's white, it means that the open interest of that particular contract has not been met yet. So in this case, we're looking at BABA, 719 expiration, 175 strike for calls. 197 contracts were traded. It didn't meet the open interest. So this is going to come across our screen as a white trade. 397 contracts were added. It's still not meeting the open interest, so it's coming across the screen again as a white trade. Sneaky whites basically means it's something we might look at, but we typically don't trade off of white flow. And the reason for that is it's just not significant enough. If this particular strike and expiration has a 3,000 open interest and someone came in and traded 197 contracts, that's not that big of a deal. So it's not going to catch our eye. 3,000 open interest and they added another 397. It's not going to catch our eye. So the flow's coming in white. But let's say this has 4,000 or 16,000 contracts open. It's just not something that's really going to catch our attention if someone's trading 200. So in this particular one, this contract had 20,000 contracts open. All of this combined is 1209. So 1,200 contracts traded for the day when there's 20,000 in open interest, it's just not significant. It's not going to catch our attention. So the flow is coming in white to tell us there's flow coming in, but it's not significant yet in terms of the open interest. So why do we say it's sneaky? We typically don't pay attention to flow that it's white because it doesn't show the conviction that purple and yellow show. That doesn't mean it won't work. This flow could turn out to be a great trade. It's just not showing the conviction yet that we're looking for. So what's nice about it is it's the same strike, same expiration, right? 719, 719, 719, 719. It's all the same. They're all 175s. This is all within a 22-minute period. They're mostly sweeps. There is a block in there. They're traded on the ask. the contract price is moving 234, 238, 242, 248. So this flow, even though it hasn't met the open interest that would kind of catch our attention immediately, it's a sneaky white flow because this could turn into something that's yellow or purple. Probably not for quite a while because again, there was 20,000 contracts open and this only represents 1209. For this to turn yellow or purple, there would have to be a massive trade going on here. But it's sneaky in the sense that we typically won't pay attention to the white flow, but because the contract price is increasing, same strike, same expiration, shorter time frame, and it's still being bought up, sweeps, ask. This is something we might be able to look at and place a trade off of. So while we typically don't pay attention to the white trade, it's sneaky because sometimes this could lead us into a good trade. And with time in the seat, you'll understand what flow you can follow and what you shouldn't. So sometimes white flow is something you just completely ignore right off the bat. And sometimes it's going to be a sneaky white flow where we can look at it and the way it's coming in, we can kind of get an idea that might be something that we do want to follow. And that just comes with seat time. You won't understand that right away necessarily. If you follow this flow and it doesn't work out, it doesn't mean flow trading doesn't work. It means you followed bad flow. So sometimes the white flow will turn into something, and with seat time, you'll be able to kind of see that ahead of time. We do have a new rapid fire alert. The rapid fire alert is one that's going to come in pretty fast, and if you're not paying attention to the flow screen, you will miss it. The flow here, this is all MU. Same strike, same expiration. Ask and above the ask, and sweeps. But what's notable about this, look at the time. This came in at 7:34 and 16 seconds. This came in at 7:36 and 14 seconds. So all of this trading came in within a 2-minute period. So because it was such a short time frame and it came in back to back to back, same strike, same expiration, that's something we want to look at. This is showing an urgency that someone wants to pile into this position. It's ask and above ask and it sweeps. So they're not paying attention to what the price is. They're saying, get me into this position for all of these contracts. So when they have the urgency to get into this kind of a position, when it's coming in that quickly, when it's coming in on the ask and it's coming in sweeps, we want to follow that one. It doesn't guarantee it's going to be profitable, but it does have a high degree of success. And the reason for that is someone has conviction about this strike and expiration that they're piling into it that quickly. That's probably something that we want to follow. If you're familiar with some of our other alerts, the rapid fire alert is basically a repeater alert on steroids. So the rapid fire is something that just comes in really quickly. This is all under a 2-minute time frame. And again, that flow coming in a 2-minute time frame is showing us conviction. So that's something we probably want to follow also. The good thing about Blockbox versus some of the competition is we show you when the buyers are exiting a position. Now, unless we're the actual trader placing these trades here, we don't know what they're thinking. We just don't. Unless we're the actual buyer, we don't know what's going on here. What we do is try to decipher the moves. So in this case, this bottom portion here, we saw this flow coming in on Macy's and we decided to follow it. It was pretty good flow. It's all same strike, same expiration, ask, mostly sweeps. This was flow that we saw coming in one day and we decided to follow it. Now, a few days later, if you look above this green line, it's the same strike and the same expiration that we saw down here that we followed into the trade. If you look up here though, these are being traded on the bid. So again, we don't know 100%, but 99% of the time, we're going to assume this is the same buyer from down here exiting the position. So this looks like the buyers are flipping out of those contracts. So if we follow the big money into the trade down here, we probably want to know when they're flipping out of the trade up here. Some of the competition doesn't show you. In fact, I don't think any of the competition shows you when these are coming in on the bid. Black Box Stocks does, because again, we want you to see the full picture. We want to show you both sides of the trade. So it's great that we can follow the big money into a trade like this, but if we're following them in, we probably want to know when they're pulling their money out. And if you look at this, the buying started coming in at 41 cents, 45 cents, 46, 48, 52, 53. When it's trading on the bid, they're 88, 85, 81. So these right here are being exited at a point where down here they doubled their position, right? Someone came in and bought these at 43 cents, 44 cents, 45 cents, and they're flipping them out at 88 cents, 85 cents. So some of these are doubled, some of these are just barely under a double. So that's a good indication that if we see these coming in on the bid, these buyers are probably stepping out of this position. They doubled their money. So when we see the same calls coming in on the bid that we saw coming in on the ask, that's an indication that the buyers are exiting their position. So again, if we follow someone into a trade, we probably want to follow them out of the trade. We don't have to. They doubled their money there, so maybe they're happy with that. We can look at a chart and think there's room to run and stay in the trade. Once we hit the buy button, that is our trade to manage. But if someone puts $300,000 into a trade, I probably want to know when they're pulling their money out of the trade. I don't necessarily have to follow it, but I definitely want to know when they're taking their money off the table. You'll also hear us say typically we don't follow blocks. Blocks are typically a pre-negotiated trade or they're tied to something. We just don't follow blocks. Now, sometimes when we're looking at a sweep and then a block comes in and then another sweep, that's an acceptable block. We're not going to follow it individually, but it's giving us extra information in this case. So this particular block doesn't have to scare us away. We're looking at sweeps on the ask, and then this block came through for the same price, $4.90 and $4.90, and then another sweep came in on the ask of $5. So this block isn't going to scare us away. It's basically the same price as the sweep that came in on the ask. So we're going to look at this block and basically ignore it as far as being any kind of a negative sentiment. Now, blocks don't necessarily mean negative, but if you see a single block come in, even if it's for $2 million, we typically just don't follow it. This one happens to be the same buyer. So even though one of these trades went through as a block, this is the same buyer accumulating a position here. Since it's the same buyer, we're not going to discount the value of the block. That basically just gives us an extra piece of information as far as what the trader is doing. So we typically ignore single blocks. But this one, since it's the same buyer as the other two sweeps up here, we're going to give it a little bit more weight as to the other flow that we see up here. So we'll typically ignore blocks, but in this case, it's the same buyer. So it's just giving us more information as far as what's going on with these asks and sweeps. We get a bunch of times, if I'm in calls and I see puts, do I need to exit? Yes and no. Sometimes you will, sometimes you won't. What we have to do is take a look at the information that's being presented to us. So in this case, on this particular day, we have flow for 7/12 expiration, and these are calls. My black box screen is set up so that on the right side column, I have the news set up. So when I click on a ticker, the news column is going to populate for that specific ticker. So down here, we have flow that came in for 7/12. Right next to that on my screen is the news column, which is showing me there's an industry conference call to be held on July 11th. July 12 expiration, July 11 industry conference call. So this flow came in specifically because someone's expecting some kind of news on this conference call on the 11th. These expire the next day. If you pile into this trade, maybe you pulled up the chart, you like what's going on, you saw the news that there's a conference call on the 11th, someone's putting some money into the contracts that expire the 12th, you like this call, you follow it. A little bit later, about an hour, we see all these puts coming in. Same ticker, this is ABBV. All these puts start coming in an hour after we got into a call position. So someone might ask, oh my God, I'm in calls and now all these puts are coming in, should I get out of my position? And in this case, the answer is no. Here's why. If you look at the news column, it's saying July 11th, there's a conference call. These expire July 12th. The puts are coming in for 2 months after this position expires. So we have a short-term catalyst and a short-term trade. These puts are for 2 months later. That's a longer term trade. That might not have any bearing on your short term trade. So we have a short term trade based on a short-term catalyst, the long-term trade probably won't affect this. This is a case where we have a short-term bullish position and maybe a longer-term bearish sentiment. So this is referring to this. This trader is making a trade based on this information. The fact that someone else thinks 2 months later there might be a bearish sentiment isn't going to affect what happens on July 11th for a July 12 contract. So if you're in a call and then you see all these puts start coming in, don't freak out and exit your position. Take a look at what's going on. Short-term catalyst, short-term trade, longer-term opposite position. So you don't necessarily have to flip out of this call position because you see puts coming in. You have to take this all into context. So how quickly does the scanner work? This is what I wanted to show you. This was a particular day where at 6:30 in the morning, and remember I'm on the West Coast time, so this is 9:30 in the morning, 00, as soon as the bell rang, this flow came in for the day. 6:30.00, 6:30.00. These three trades came in the second, not even the second the bell rang, instantaneous. When the bell rang, these trades came across our scanner. This is 6:30 my time, 9:30 in the morning, 00. This came in instantaneous when the bell rang. This scanner is tied into the exchanges. When something hits the exchange, it hits our scanner. 6:30.01, 6:30.01, 6:30.01. These are all 6:30.01. All of this flow came across our scanner within 1 second. 6:30 in the morning and 1 second over here. 6:30 in the morning, 1 second. So all of this flow on our screen came across our scanner within 1 second of the market being open. These first three, instantaneous. So when these trades hit the exchanges, they come across our scanner. There is no delay whatsoever. The scanner is tied into the exchanges. You'll hear Charlie say a bunch of times that we'll see this flow before the buyer who made this trade sees the confirmation in their account. As it hits the exchange, it hits the scanner. This is all real time. We see this at 6:30 in 1 second. There's no delay on this information coming across our screen. It hit the exchange at 6:30 in 1 second. It comes on our screen at 6:30 in 1 second. So the scanner and the flow that we're looking at picks up information instantaneously as it hits the exchanges. When you get good at reading the flow, you'll be able to predict some of it. So again, I'm on West Coast time, so this was 6:49 my time, which is 9:49 in the morning on the East Coast. 9:49, Charlie, SLB puts coming in, starting to see some action there. Guess what? 9:49, 10:02, repeater bearish flow for SLB. So at 9:49, I saw some SLB puts coming in. The way they were coming in, I started to see that there's probably going to be an alert coming up. It didn't meet the algo's criteria yet, so it didn't alert, but the way the flow was coming in, it made me look at it and say, we just need a little bit more information and it's going to trigger an alert. 9:49, 10:02, the actual alert came out. SLB puts coming in, the alert, SLB bearish. So after you read the flow for a while, you'll be able to see the alerts before they come out. And that's just based on reading the flow and watching how it's coming across our scanner. So is that repeatable? Can you do that on a multiple times? Is this something that's just kind of a fluke? Nope. Here we go. This was another day at 9:39. Charlie, keep an eye on Oracle, starting to build up. We need another one to alert. 9:39. 9:49, 10 minutes later, repeater bullish flow for Oracle. 9:39, keep an eye on Oracle, starting to build up. 9:49, repeater bullish alert for Oracle. So again, when you put in the screen time and you really start to pay attention to what the flow is telling us, you'll be able to look at it and get an idea of what may or may not trigger. Now, at 9:39, if no one placed an Oracle trade after that the algo picked up, it will not alert. The reason I'm seeing a buildup here is because of the way the flow is coming in. but it didn't meet the criteria to be alerted yet. So I'm saying keep an eye on it. We're starting to see that build up. We need another one, and sure enough, another one did come in. If another one didn't come in, it wouldn't trigger because it didn't meet the algo's criteria yet. But the way it's coming in, I can see it, and I'm saying if we need one more, all we need is that one other trader to place the alert, and sure enough, they did, and 10 minutes later, the alert gets triggered. So if you put in the seat time, you'll be able to see the alerts as they, or the trades as they come in, and you'll get an idea of what might and might not trigger. And that's just from watching the flow and understanding how it comes in and the different type of alerts that we have set for them. And this is all great, but how do we use it to make money? Well, here we go. 10:02, we have repeater bearish flow in SLB on whatever day this happened to be. So 10:02, an alert comes in. This is the chart right here. It climbed for the day, it dipped. It's consolidating a little bit, but right here, someone placed the final trade to trigger that alert at 10:02. 10:03, again, I'm on West Coast time, so 7:03 for me is 10:03 on the East Coast. 10:03, I filled opening that position. And here's the funny thing, this is exactly 1 minute, 10:02:26, 10:03:26. So my trade is exactly a minute after this alert came out. So some people say, well, how quickly can you follow the alerts? This alert came across at 10:02, 26 seconds, and my trade 1 minute later, 10:03:26, I have an entry. So you're watching the chart. It went against me for a little bit, and then it started declining. It started popping again. Remember, my entry is over here. Because of this pop right here, my stop loss is going to be somewhere up there. It gets all the way here, but I'm not losing money yet because it's still below my entry. And then it starts declining again. It gets all the way down here. At this point, I think I had a 20% gain, 22%, somewhere around there, and then it started reversing on me. When I had a 22% gain, whatever that was, at this point, I was down to a 13% gain. One of my rules is that if I'm up, I don't want to see a good trade turn bad. So if I'm up 20% and then down here, it looks like it's reversing for the day, and that's about the time frame where we might get a reversal. If I go from 22% to 13%, I'm looking at this to try and cut it before it goes from 13% to 0, and even worse, maybe a losing trade. Up here, there's a little bit of congestion and resistance and support. So it's in an area where it might do something funny. I went from 22% to 13%. For me, I'm going to lock in that gain before it goes to 0. And if we look at the rest of the chart throughout the day, it would have gone from a winning alert to a negative alert because it's way up here at the end of the day. So not all alerts will return a massive gain. It's our job to manage any trade we enter off of an alert. This is an example of a trade that was working out but turned against me. Even though it turned against me, I was still able to lock in a 13% gain. So I was in at $1.83 per contract, and I closed it at $2.07 per contract. The alert came in at 10:02, and I entered at 10:03. So when you see these alerts, you do have the possibility of getting in right after the alert and making some money. Now, the alert came in at 178, I paid 183. So even though I'm only a minute after the alert, I cannot get in at that price because the contract price was moving. The alert came out at $1.78. I'm in at $1.83. Close enough. It's 5 cents off, but you won't necessarily get that same price. Now, if you waited for the chart and you saw it pop up here, you would get a better price. If you wanted to enter it, you can get a better price than the alert up here. But this is how we would use the alerts. So 10:02 it came in, 10:03 I entered a position. It was doing good. I was down or up about 22%. Then it started turning against me. I locked in a 13% gain. That's not a huge gain, but the alert came in, it was working out, and then it looked like it was reversing. So I locked it in, 13% gain. Not a lot of time. It was about half the day, 13% gain locked in. That's how we use the alerts. So what are we looking for with all this flow? Time frame. There's two things on time frame. We either want a really short time frame or we want it continuously pounded all day long. Same strike and same expiration. Contract price increasing. Ask or above ask. Sweeps. Now, the flow without all of these boxes checked, it can still work, but the higher probability trades are going to have all or most of them checked. And with screen time, this checklist is automatic. You'll spot it on incoming flow in a split second, real time as it's coming in. It's not something you have to think about. When you see the flow, you know it has these or it doesn't have these. So short time frame or just continuously pound it all day long. Same strike, same expiration, contract price constantly increasing, ask or above ask, sweeps. This is the flow that we look for when all the boxes are checked. This is the flow we're going to follow all the time. It's not going to work out all the time, but the more boxes you have checked here, you have a higher probability of that being a successful trade. And that's what being a flow trader is all about. You might have same strike, same expiration, contract prices aren't moving. There's ask, there's above ask, maybe there's nothing. Maybe there's some bid and below the bid in there. Maybe there's sweeps and blocks mixed in. You can still make money on that trade, but the probability is lower. So we want as many of these boxes checked. If you have them all checked, that's a higher probability trade, and that, as flow traders, is what we're looking for. Some thoughts on being a flow trader. The flow is just other people's trades. All we're following is another trader. That doesn't mean the trade will work. When we're following flow or the alerts that come from the flow, it doesn't mean they will work. Not all flow is equal. Don't follow bad flow. I get some messages on Twitter from time to time that says, hey, I tried to be a flow trader. I followed a bunch of flow. It didn't work out. Flow trading doesn't work. Yes, it does. There's a bunch of us that trade off of it every day. We can prove to you that it works. But if you're following bad flow, you're following those trades that have a lower probability of working. If you want to trade off of the flow, sometimes there just won't be a trade to make. You'll have to learn to sit on your hands until the right flow comes along. So there might be 2 or 3 days of mixed flow. And then one day there might be that pristine flow that we're looking for. And if you just get those pristine flows and you stop trading off of bad flow, your success rate will increase. It just will. Over time, you're going to have more good trades than bad trades. If you follow all the flow that you see come across the screen, you're not going to be a successful flow trader. There is bad flow. And then sometimes even the pristine flow can fail, so know your stop loss limits. Know where you want to cut your trade. Don't let trades get out of control. One of the main rules of trading is protect your capital. So even though we see pristine flow, it could have all those boxes checked. If it starts turning against you, know where you want to get out of the trade. That's about it for the basics. With screen time, I promise it gets easier. And it gets to the point where, like those few slides I showed you, you can spot what's going to potentially alert before it alerts. And that is flow trading. So if you have any questions or comments, you can email me at mike@sevenstartraders.com. You can leave a comment below. I will respond to those. You can follow me on Twitter at 7starmike. And I do answer questions there, both publicly and privately. So you can reach out to me there if you have any questions about flow trading, or if you want to be a flow trader and don't understand it. I can show you the scanner in real time. I can pull some screenshots for you. If you have any questions or comments about flow trading, by all means, reach out to me on Twitter. Leave a message here. You can email me. However, it's easiest for you to get in touch with me. Please ask some questions. And that is flow trading. So as always, thanks for watching and happy trading.